and start with Shoprite. Because as Sid will tell us in a minute, this is the largest of the lot, and it's in transition mode because it is now basically in the control of Steinhoff Africa Retail. But groceries are what they are. We know their businesses locally and across the southern African sub-Saharan continent. Market capitalization is 127.6 billion rands. Price earnings ratio 21.1. Dividend yield 2.33%. Let's put up the share chart as a precursor. That's the 5-year picture.
We're virtually at the peak, as you can see.
That doesn't look too bad.
No, it looks excellent. But the results have been excellent. That's why you see that that share price performance there. The results have been exceptionally good.
And why is that? Do you think they've just executed well? They've done all the usual things well with their distribution centers? The management transition's gone well?
It's right across the board, and we can put all of that under the label execution. I mean, it's execution from the DCs, from rolling out stores in the right area at the right time, getting the pricing right, getting the price perception right, and targeting the right consumers. But we're right now in the middle of an interesting transition, and that's one of the reasons why I chose the share. We have a new management team, and I'm on record as having said, and I'm not the only one who said it, by the way, that I did not and do not want Peter Engelbrecht, the new CEO. He mustn't be a Whitey Besson the second. I want him to be Engelbrecht the first. there is no Besson the second.
Yeah.
And Engelbrecht the first is going to change the way...
He's been there a long time, right?
No, he's been there 25 odd years. But be that as it may, I want him to put his own rubber stamp on the business, and I think he wants to put his own rubber stamp on the business because he will then be measured down the line based on what he has done from the day he took over to the point he ultimately leaves.
And that sounds great and good and well. But explain to me what's happened, Sid, because it used to be that Christo Wiese controlled this group by virtue of shares that he owned himself, plus friends, and then some
No.
or extra voting shares.
He's super voting shares, and that came about with the original unbundling of Pepco and Pepgro, and we're going back about 20 odd years. So he's super voting shares plus his economic interests, which was about 16 or 17%. Gave him 45% of the voting rights.
Right.
And the economic interests plus the voting rights have now been sold via the option process to Steinhoff Retail Africa.
Which means that Shoprite, as we see it now, is controlled by Shoprite.
And will be consolidated by virtue of the super voting shares.
Okay, but what is it going to change as a function of that?
It's going to change nothing.
Okay.
Shoprite continues to operate exactly as it's always operated.
Independently. You don't anticipate that Star will then merge its Southern African Pepco interests?
No, not at all. Not at all. Because remember, we then have to deal with the minority shareholders. Minority shareholders aren't going to want that. I don't believe they'll want that.
So why did they do the deal? What's the point?
I think to consolidate Visa's interess,
so
his
Visa
retail
then,
interests
because
under
Visa's
one
interests
roof.
then go to the top, right?
Correct.
And become reflected in Steinhoff Africa Retail.
And of course his other interest in Steinhoff International. I think that was the primary reason for it. But Shoprite continues to operate exactly as before. Of course, there are areas where they can cooperate, and I think we got to define the word cooperate. And I think those areas are more to do with efficiency issues and logistical issues rather than buying tomato sauce together.
Okay.
Or buying clothing together, or buying household goods together.
But they may use relationships or work in sort of financing areas perhaps together, or that sort of thing.
To give you a few examples, kind of things I think of. In Angola, for argument's sake, both of them have extensive operations. They could build a joint DC.
Yeah.
We don't have to build 2 DCs. We can build 1 DC, put a wall in the middle or something like that. We can share the infrastructure inside and the people inside the DC.
Yeah.
That saves a lot of money. We can build, Shoprite have been extensively building their own shopping centers in Africa, obviously for Shoprite stores, simply because they couldn't find developers. Of course, developers are easier to find today, but whether you do it yourself or you do it with a third party, I can now go to either myself or the third party and say, listen guys, I want a Shoprite, and I want one of Joshua
A Pep stores or something
and
right
I want
next door.
and I want a Pep, and I want a furniture store, whether it be an OK Furniture or
which
would be
obviously makes
one of the Steinhoff retail brands. But I can offer you a half a dozen stores. Not one, I can offer you a half a dozen. And it suddenly becomes a very attractive proposition for the developer.
Okay, look, I mean, let's leave aside that issue because you've clarified my key point, which is that nothing really changes, but some things change.
But there's one big thing in South Africa that's going to change. And I see, having been down to the results presentation and spoken to Engelbrecht and some of his top management team, I see a shift in the focus of the South African business more towards the Checkers brand, which targets a completely different market, to the Shoprite brand, where I think there will be less focus. Now, of course, this is a major shift because we are taking Checkers up against Woolworths, and the new Bluebird store, which is fairly close to where we're sitting today, is one of their new generation flagships, which is designed to do that. Absolutely. So that is a major shift in the business, and it takes them, of course, up against Pick and Pay in the traditional Checkers brand. Now, why is
and
that
you think they're
important?
going to succeed?
Well, time will tell if they. There's no reason why they shouldn't succeed. But let's, I mean, this is a major shift in focus. And I say to myself, I sit back and I say, well, why are they doing it? Is it correct for them to do it? What is the logic behind it? And my logic is very simple. When Mr. Basson, when Whitey started rolling out the Shoprite brand and developing the brand, he was capitalizing on social grants, virtually all of which, the major part went into food, and he was capitalizing on the shift from informal to formal retailing. In other words, away from the wholesalers to the formal brands who were establishing stores in and around the major township markets and what have you.
Right.
Well, in my opinion, we are pretty close to the ideal ratio between formal and informal.
So you need something new.
So you need something new. In other words, when they started, I think the ratio was closer to 45-55, 45 being formal and 55 informal. Today, we are at what I think is the optimal ratio of 75-25.
Sid, you know the way it works here? We're going to get 5 minutes per stock, and then you have to tell me if it's hot or not. It's at its all-time high. It's looking toasty. But do you think there's more to come?
I still think there's more to come. Given all the things I've just told you, I'm still hot on the stock.
Excellent. Good. There you go.